It is a special Friday today. Happy Eid Mubarak to all our Muslim brothers and sisters across the globe. We pray that Allah grants us more decades of celebration on this planet. In the spirit of the celebration, I'm excited to be welcoming you to our program, Financial Inclusion and Economic Development on Amorgate Radio Communications. It's going to be another engaging, exciting, informative, and insightful episode today. I remain your host, Titilola Ogunshono. Last episode, we commenced an interesting topic. We looked at financial literacy as a catalyst for financial inclusion and of course as enabler of achieving economic growth and development in a nation. We gave various, definitions of financial literacy, and one of which is the one by the Central Bank of Nigeria, which we define as the possession of knowledge and skills by individuals to manage financial resources effectively to enhance their economic well-being. And we mentioned, some components of financial literacy that were crucial. We mentioned budgeting, investing, borrowing, looking at interest rate element, rate of interest, repayment period, structure of the loan before you take that loan. Okay, we looked at taxation, awareness in issues of tax obligations, compliance issues, ethical strategies that one can adopt, adhere to in order to reduce tax liabilities. And of course, we went ahead to talk about, proper income management, the need to cut down on unnecessary expenses so that we can achieve financial growth and stability as an individual. And we said, even the CBN, according to reports, saying that majority of the people can only participate optimally in the formal financial system if they are financially literate. So, issue of financial inclusion would be more realistic, when your people, when the citizens in an economy in a nation are financially literate. And we mentioned the importance of, the financial inclusion, financial literacy. Okay, so we mentioned the importance of financial inclusion. We went further to talk about the importance of financial literacy, and we said it's going to enable individuals to make better informed financial decisions, and that of course would improve business growth and expansion, understanding of financial planning, the tax and regulatory requirement, various funding options, the risk management strategy, the market research, finance strategies. All of these will help to improve business growth and expansion. You also mentioned that it was also important, that you understand financial matters, because it's going to help to increase financial inclusion and credit access, because understanding the financial processes would help to build trust and confidence in the financial system, and more people would be included in the formal financial space. We also mentioned that it was also important to understand the need to build and improve credit scores is important. It's vital, because for you to access credit facilities now in the near future, one's credit score is very important. And we talked about the ability and the willingness to pay back. And sometimes it's said a cultural issue. Some people have the ability but not willing to pay back. So both components are quite important. So one must understand this, because it will determine your ability to be able to borrow funds now and in the nearest future. And for the benefit of those who could not listen to last week's episode, we also mentioned, when talking about budgeting, that is important. You could use the 50-20-30 method. Set aside 50% of your take-home income for your needs, 30% for wants, and 20% for savings. Or you could use a zero-based method, or the envelope method, that's creating different categories of your income expenses. And we also mentioned the last but not the least, the reason why you need financial literacy is that it helps you to to be more disciplined about savings. Savings is very important, and we said it's not really about how much you save. It's about the consistency. You need to stay consistent, and we always advise that just to a percentage that would work for you, a 5% of what you earn. If you have chosen that, then stick to it. A 5% of $1,000 might look small, but if you have actually stuck to that 5%, when you start making $10,000 or $1 million, 5% will be on the increase then of total value of savings. So consistency is very key. And we mentioned last week that we're going to take empirical evidences across the globe, at that countries, at that nations that have gotten it right in terms of the level of financial literacy. Okay, so we look at the top 10 most financially literate countries around the globe. So if we let's look at what have they done right. What are the strategies? Did they have a national financial literacy strategy? What was the strategy about? What were the main components of the strategy? So we can take learning curves from these countries. We have the Standard & Poor's Global Financial Literacy Survey. It is one of the world's largest and most comprehensive global measurement of financial literacy. It basically looks at 4 basic financial concepts. The first is risk diversification, inflation, numeracy, and interest compounding. That was a survey done in 2022, and it revealed some interesting statistics, that is one of which is 33% of adults worldwide are financially literate. So we have 33% of adults worldwide that are financially literate, and we have over 50% of adults in the US who are financially literate, and worldwide too we have 35% of men who are financially literate on the average, and we have 30% of women who are financially literate. So we still have that gender gap globally between men and women, in terms of level of financial literacy. So we look at this particular survey that was carrying out the ranking of the best 10 financially literate countries across the globe. We'll start with number 10. And the level of financial literacy in Finland is over 60%, as reported in this ranking. And the national financial literacy of Finland is quite unique. And if you look at Finland, is viewed as a welfare state, and of course being a welfare state would have its drawbacks, and means the various merit that it could have. And one of it is that among the citizens there will be lack of experience in pension planning. It's a welfare state, so the need to plan for pension might not be very not very high, because, and again, the pension system was partially a funded defined financial benefit system. The implication of this kind of system is that most employees will have few choices to make. Is that the decision to purchase a pension insurance, or otherwise, But the interesting things that we cut in benefits and the need, to meet up, with personal obligations, as in the letter, an increase, in the shift to of personal responsibility. I try to look at what they have done differently. One thing that Finland has done is that they have a nationwide mandatory literacy curriculum in place, that requires especially all ninth graders to participate in economic education that combines personal finance and macroeconomics. That is huge. So educating students in financial literacy has really helped them, and having a curriculum in place that would allow you to participate in economic matters, macroeconomic issues. So definitely you are going to be looking at savings, you are going to be an investment, you are going to be looking at various sectors of the economy. Where can you play? This is one of the things that have helped Finland, that Finland as the 10th most financially literate country in the world according to these reports. So looking at Australia, also over 60, like about 64% level of financial literacy. They have high level of financial literacy among younger citizens. Okay, and the reason is not far-fetched. It also realize that financial literacy is included in both primary and secondary school education, and you see that about 79% of 15-year-old students in Australia have a bank account. In fact, as far back as 2012, the Australian Securities and Investment Commission introduced what they call the Money Smart Teaching Program. And financial literacy was included. In fact, even taught the teachers. So that was one of the reasons, why the level of financial literacy is high. Get them young, infuse all of these financial discipline in them so early enough, and that would help the nation. So talking about financial literacy as a catalyst for financial inclusion, we can see how this is playing out with these rankings and taking a closer look at the countries. At number 8, we have Netherlands at with 66% level of financial literacy. And what I also discovered is that the Dutch government has strong belief in the education and enlightenment of consumers, and they believe so much in keeping them with adequate financial knowledge. I try to look at what have they done differently, what have they done strategically over the years, and I realized that one of the platforms that actually helped in fueling the level of financial literacy in Netherlands is that they have what they call the National Institute for Family Finance Information, NIBOD, which was established in 1979 and was established as an independent foundation to collect data on household spending. Until date, it remains one of the biggest players in financial literacy education in the country. And this data collection of this data has served as an information portal for consumers, and this data has been used by local and national government to assess their policies as well. The policies have been faring, and of course we also have the banking industry also making use of this data collated to establish lending and mortgage norms, to look at the trend of the lending and mortgage aspect of the banking industry. And they had the most recent national financial literacy strategy, which was produced in 2019, and you see that this nation was deliberate about this, and they came up with the national financial literacy strategy in 2019, and it laid so much emphasis on the importance of integrating financial literacy also into the school curriculum, and not just taking it as a separate course, but rather taking it as an integral aspect of existing courses. So some of the courses they had, that look at where to infuse financial literacy inside of it. This really helped Netherlands. So no wonder they are the 8th most financially literate country across the globe. Having Germany at number 7, about 66% too. Well, the state of the financial education was not clearly defined. Was not clearly defined. But one thing I could see for Germany is that students receive economics education. Either it was infused in other subjects or as a standalone topic. But the focus of Germany that has helped is that there has been so much focus on regulating the retail financial market, and this has helped Germany retain that spot, having that spot as the 7th most financially literate country across the globe. At number 6, we have United Kingdom. The UK at 67%. So what have they done differently? For UK, the national strategy is quite unique. It's more than like 100 page long, and they have this 10-year planning horizon. And the focus has been on financial capability, and specifically is more of building individuals' financial skills than knowledge, attitude, and motivation. So this has really helped UK, increase the level of financial literacy in the country. At number 5, we have Israel at 68%. What did they do differently? What was Israel's strategy, in achieving this high level of financial literacy? Well, I tried to look at it as far back as 2007. The Israel Securities Authority launched a campaign to increase public involvement in the financial market. That was in 2007. And a year later, 2008, the Ministries of Finance and Education both agreed on something germane, and that was the fact that financial literacy should be part of mandatory elementary school programs on life skills. And this was the foundation of what they achieved today. And again, when Israel joined the OECD in 2010, the promotion of financial literacy program was later handled by the Capital Market, Insurance and Savings Division of the Ministry of Finance, known as the CMISD. And this was what they did. And a couple of years later, in 2012, the CMISD, that's Capital Market, Insurance and Savings Division of the Ministry of Finance, they published the first national strategy for the advancement of financial education in the country. And a lot we can't go into the further details on this particular strategy, but what we'll say is that it yielded positive results for them. Though we still have a bit of variations between gender in Israel, because the men are more financially literate than the women. On the average, we have more of men than women who are financially literate. And again, it also noticed that about the richest 60% of Israelis in the report that saw about 72% financial literacy, and the poorest 40% had about 63% financially literate people. So from this you can see, and that's what we're going to see, look at the relationship between poverty and financial literacy. Financial inclusion, you can see that here. So that is about Israel at number 5 position. Thank you so much for joining us. If you're just joining us today's program, we have been looking at the 10 most financially literate countries across the globe. At number 10, we mentioned Finland. At number 9, Australia. 8, Netherlands. 7, Germany. 6, we mentioned United Kingdom, the UK. At number 5, we mentioned Israel. And we've looked at look at it closely at what these countries have done differently. And we said in 2012, the CMISD, the Capital Market, Insurance and Savings Division of the Ministry of Finance published the first national strategy for the advancement of financial education in Israel. And this strategy looked at 6 major areas. The first area was the financial basics and bank accounts. The second area that it looked at was savings and investment. The third, household management. The fourth, retirement and pension issues around this. The fifth, collateral and risk management. And 6, credit and debt. If you look at this, you see that this is robust. This strategy is very robust, and the focus was more on improving citizens' financial capability. It's not just looking at financial literacy. If they are literate, then do they know how to apply what they have learned? And this is more robust. And the initiative also looked at the role of libraries in financial education, and what they also looked at was to discuss existing initiatives at play in homes, in the libraries, in the museum. It was not about creating new scenarios. It was more about looking at the existing structure in homes, in the libraries, at the museum, infusing this to achieve financial capability objective. And also there was direct maximum effort towards students from the lower socio-economic background, and the motive was reduce financial inequality in the country. So this is it for Israel. So we'll move to number 4, the fourth most financially literate country in this particular report. At this ranking, the time it was published, was Canada at about 68%. So let's see what Canada has done differently. And looking at Canada in 2009, there was a task force on financial literacy, which was created as at then, and it was actually criticized. Okay, and the major thing was that some people felt they had an over-representation from the financial sector. However, but what they did by 2020 was that 7 provinces and 2 territories have financial literacy included in their secondary school curricula. It was included as at 2020. Now, what happened at 2020 did not happen overnight. So what between 2009 and 2020, what happened? What did the government do differently? Okay, under the National Strategy for Financial Literacy, which was published in 2014, Canada had the financial literacy leader and the National Steering Committee on Financial Literacy. So in 2014, they had the Steering Committee on Financial Literacy, and they had 3 main goals. Okay, in the strategy, the first was to manage money and debt wisely. The second was to plan and save for the future, while the third was to prevent and protect against fraud and financial abuse. Okay, because it was also proposed again at then that financial education should be built into existing activities and events in people's lives, because that was the way to go. That was the way it was going to be plug and play, was going to be more effective, more responsive that way, and government took steps to improve consumer protection at that time while still pursuing financial literacy initiatives. So it was not just the financial literacy initiatives that was paramount, also steps were taken by the government to improve consumer protection, because if you look at that would also build the confidence of the people in the financial sector. This was what Canada did at that time. And institutionalizing the National Research Plan for Financial Literacy was awesome, because this program had to employ both sectors, both the public, private, and even the non-profit sectors. They had to collaborate together to improve financial literacy, because it's so important that it was government cannot, the public sector alone cannot do this. It's two collaborative efforts, everybody coming together to ensure that financial literacy was improved in the country. And number 3, we have Norway, 71%. And if you look at it intensely, there was really no specific national strategy that was focused on financial education. However, there were various programs that really, encouraged and improved the level of financial literacy in the country, and there was so much focus on the youth, because youth receive financial education through programs that were actually funded by the National Bank. They had education programs on how to save, housing plan, pension plan, and all of these helped to improve the level of financial awareness and literacy among the citizens. And we also have private initiatives by banks. Okay, like one by the Savings Bank. Okay, they have this online financial literacy program. Okay, and that would educate for education for those individuals, and even for students, to educate them on financial matters. So we had, and it's free online program, which I saw. I had to look at it myself. So there was no specific national strategy on financial education, but they had a lot of financial literacy programs going on, being funded by various establishments. And moving upward the ladder, we have Sweden 71%. If you look at that, it's a tie. 71% financial literacy in Sweden. We can actually be traced back to the 1800s. Okay, we have the school savings movement that was introduced by the French economist Augustin Durand de Molot in 1873. Okay. And what history has revealed to us that even this great French economist, Augustine, was inspired by the Vienna World Exhibition. Okay, so it's dates back to the 1800s. The issue of saving in Sweden. By 1901, the Swedish Savings Bank Association started a campaign to promote financial literacy in schools. Okay, as far back as 1901, and what they do presently at schools, they give life financial skills are taught. No wonder the rate of financial literacy is quite high in Sweden. So would we have at number one? There's a tie between three countries in this report. At number one, we have Denmark. Okay, a tie between three countries: Denmark, Sweden, and Norway. So now trying to look at what are those things they've done differently. Okay, you see that for the Danish household, generally they have large assets, and Danish employees receive pension plans of about 10 to 15% of their income with compounding interest. So the truth about those in Denmark, okay, the Danish household, an average Danish household is aware of future finance. Okay, the aware of future finance is there, and again, what has also helped the financial education is mandatory. They are specific about it. For 7th to 9th grade students. We have another country I mentioned earlier that looks at those 9th graders, but for this Denmark is 7th to 9th grade students. Okay, and they also have an annual event organized by by the Danish Union of Teachers of Mathematics. It's for adolescents between 13 to 15. It's titled the Danish Global Money Week. Okay, and what they do is they have financial experts, they have financial professors brought to speak to school children. So it's a global money week where they have people coming in here to speak to them, and it's a big event because what I've seen is that every year we have about 20,000 students in about 700 schools who participate in this Danish money week, where these professionals will come to classroom to educate students on the importance of financial knowledge. Okay, so that's Denmark. This is what they've done differently, and this is what has been helping in terms of high level of financial inclusion and even achieving economic growth and development in that country. Wow, this is all we can take on today's episode of our program. We'll be taking this discussion further next week. We'll be having a distinguished guest who will be coming in with a lot of experience and expertise on the subject matter. We'll be looking at various aspects, various perspectives, on the issue of financial literacy. It is still the mood of the festive period, okay, and it's the mood of taking the ram meat, chilling with family, friends, loved ones. Okay, but I would not leave without dropping the quote of T. Harv Eker with us, who says that the number one problem in today's generation and economy is a lack of financial literacy. Thank you so much for joining us. Thank you for staying to the end of today's episode. We hope that join myself and my colleagues next week. We have programs Monday through Fridays. It's still the same time, 5 p.m. WAT on Amalgate Radio Communications. Remember that for your consulting, training, and communications needs, we have you covered. You want to learn more about us? The website is www.theamalgate.org. For previous episodes that you have missed, kindly click subscribe to our YouTube page. You get we have about 257 videos uploaded that you can learn from. And if you have questions, feedback for us, send a mail to contact@theamalgate.org. contact@theamalgate.org. Till I find my way to your devices next Friday, I'm saying do enjoy the festive season. Keep safe, stay blessed, I remain Titilola Ogunshola. Bye.